Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is October 19th. We are going to take a look at Albemarle. I believe that's how you pronounce that. This is one out of the materials sector. And if you have been hanging around watching the videos and you have not done so already, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. It really does help a small YouTube channel like me whenever you hit that subscribe button. Hit the notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the videos. Share with anyone you think that might find value in the videos. And hit the thumbs up as well down there. All those things really do help out to spread the word. If you are a dividend growth investor, that is what we cover on this channel. Let's jump right in and take a look at Albemarle, again out of the material sector. And this is a dividend aristocrat. So if you want to know more about this company, check them out at www.albemarle.com. That is www.albemarle.com. And I hope I am pronouncing that right. And you can see all the locations around the world that they have, again, out of the materials sector. So you can see energy storage, specialty materials, conversion plants, resource locations, research and development, recycling sites, production sites, their headquarters, joint ventures, regional sales offices. So if you were to go into their web page there and click on each one of these, you could see which one. And I covered up Africa here. They did not have any in Africa, but North America, South America, all across Europe, Asia, down in Australia, right? They are pretty much scattered around the world. I'm pretty surprised actually they didn't have anything in Africa, but it is what it is. With a history that extends back to 1887, so another one that has been around the block. Again, this is a dividend aristocrat here. Today's Albemarle is a leading global producer of catalyst solutions and performance chemicals. So they are in the material sector and they do a lot of chemical production. Our products are used as additives to or intermediates for a wide range of products manufactured by pharmaceutical companies, cleaning product manufacturers, water treatment companies, agricultural companies, electronic goods manufacturers, refineries, and paper and photographic companies. We operate on a global scale, serving customers around the world. So they have their hands in a lot of different companies' operations that you may not even be aware of. Again, this one has been around for a long time. I was not aware of this company here. It's one I heard about from another YouTuber out there. So really appreciate that. And I do watch YouTube to get information as well. So if you guys have other YouTubers that you watch, go ahead and drop them down in the comments. Be interested to know if we were watching any of the same ones. Maybe I'll do a video sometime of everyone that I watch. But for now, let's take a look at Albemarle and keep on going here. And they were down 5.45%, big drop on the day. Again, anytime I see a big drop like this, 3, 4, 5, 6, 7%, I am going to take a look and see if there is any potential value there. Albemarle Corporation, ticker ALB, out of the material sector. That is who we are talking about. They closed out the day at $144.56, though it looks like in the after hours, at least around 5:30 whenever I started looking at this one, they were down even further. So big drop and continue to drop on this one. 52-week range as low as $142.67, as high as $334.55. And as you can see, clearly closer to that 52-week low than they are that 52-week high. And that is a huge spread right there between their low and their high. Average volume of 2 million today was 4.17. And you can clearly see, other than this big jump up here right about 10 a.m., pretty much a sell-off from start to finish. Market cap up 16.964 billion, a beta of 1.63, so they are much more volatile than the overall market. And again, you can see that volatility throughout the day. PE ratio, price to earning ratio, very low on this, 4.35, though this is not uncommon for companies in the material sector. EPS extremely high on their earnings per share, $33.25 per share, extremely high. That is a smoking high number there. Earnings date November 1st, so be on the lookout for that if you are interested in this company. Forward dividend is $1.60. They are a quarterly payer, I believe. We'll see that here in a little bit. And their dividend yield, it is a little on the low side, 1.05%. Let's see if they are growing fast enough to justify that. That's a little lower than I typically go for, but it is, like I said, a dividend aristocrat, so they have a proven track record of growing that over time. And if they were to pull back a little bit more, maybe they set a new 52-week low and you can get that a little bit higher, but that's not a terrible dividend yield for a company with such high earnings per share. Ex-dividend date was September 14th. Looks like they paid out on October 2nd, so you would be in line for the next dividend if you were to buy them now. And 1 year target estimate, at least according to Yahoo Finance, of $251.24 per share. So they do see some significant upside in the price, the stock price on this one here. Now, I like to go into statistics and look at dividend yield theory. To do that, we go down to dividends and splits. We look at their 5-year dividend yield average, 1.24%. We compare it to their current 1.05. Over here, 1.05, same numbers, right? Forward annual dividend yield, current annual dividend yield are the same. And since it is lower, that actually speaks to some overvaluation on this one. So according to dividend yield theory, this one needs to set a new all-time 52-week low and pull back a little bit more for us to be potentially undervalued, at least according to dividend yield theory. Now, this is one thing I do really like. Extremely low payout ratio, 4.78%. So even though they have a low payout percentage here, low yield, they do have a very low payout ratio. So they have a lot of room to increase this over time. Now, I like to get into the financials. You will find a lot of good information in the financials. You can find their balance sheet, their income statement. What are their debt levels? Are they paying down debt? Are they increasing debt? What are their assets to their liabilities, right? You always want to have more assets over liabilities. A lot of good information in there. Is their revenue growing? You want to check all that out if you're interested in this company. That's more of a deep dive you should do. Anytime you're looking at a company, you should know what their financials are. You should know about the company, how they make their money, what are their future projections. But for this video, we are going to look at their financials and look at free cash flow. We want growing free cash flow over time because that's what dividends are paid out of. We want to make sure that dividends are covered by their free cash flow and that it's growing over time so that we can have growing dividends over time as well. 2019, they were actually a negative 132,422,000. Looks like they were buying a significant amount of shares, so that might be part of it. 2020, same thing in the negative, though not as bad, negative 51,563,000, still buying back shares. 2021, another big drop down in negative free cash flow, 609 million, but buying back even more shares. And then finally in 2022, we are in the green, 646,203,000, and still buying back significant amount of shares here. Very nice to see. It looks like to date here in 2023, they're even going to have a better year, 963,891,000 to date, and not buying back as much shares as they were in the previous years, but still looks like they're going to get some in. So overall, we're going to say from 2019 to date, right now in 2023, they do have growing free cash flow, so that is good to see. Now, another source that I like to go to is stockanalysis.com. I am not affiliated with stockanalysis.com. I am not affiliated with Yahoo Finance, which we saw on the previous page. And make sure you are looking at more than one source so that you can back check the information that you are getting is correct and that it is up to date. And according to the 19 stock analysts on this one, they call it a consensus buy. I actually would go with dividend yield theory on this one, not knowing enough about the company and not having done a discounted cash flow analysis on this one. I typically do lean towards this dividend yield theory, so I would want a bit more of a pullback, though their lowest estimate on this one is $155, and it currently sits lower than their lowest estimate, which would be a 7.22% increase from where it currently sits. They have an average estimate of $254.37. That would be a 75.96% increase from where it currently sits. And if it happened to hit their high, which would be a new all-time high, it looks like $498 per share, that would be a 244.49% increase. All the while, you could collect that 1% dividend yield that we saw on the first page there, or the previous page there, even though it's not much, but that is a lot of potential upside in the stock price. Now, I like to go into statistics here and look at return on equity and return on invested capital and see how this company is doing, or companies in general are doing, reinvesting their capital into their business. Excuse me. And these numbers are smoking high. I like 10% or better. As you can see here, 46.4% return on equity. That is just smoking. Return on invested capital, same thing, 34.6%, much higher than the 10% I'm looking for. Even return on assets, 23.8%. Very, very nice numbers overall. And I also like to look at their forecasted EPS growth and revenue growth. EPS is what I really focus on, but I always throw this in as a kicker because typically if your revenue growth is growing, your earnings per share growth is growing. And again, I like 5% or better. And again, smoking high, 12.77%. Now that is what I'm talking about for forecasted earnings per share growth, and even revenue growth forecasted at 11.64%. Again, I like 5% or better, so that's more than double what I'm looking for. Very, very good numbers. Other than dividend yield theory, on this one, the numbers look very, very good. So again, as we saw on the first page, payout ratio very low, 4.81%. Though this is what I don't like, dividend growth only 1.27%. So hopefully they are doing a lot of investments back into the business. They were, as we saw, repurchasing shares. So I'm okay with that if they're using their free cash flow for that. But I would like to see a little bit more dividend growth with such a low payout ratio. As we said, quarterly payer, they do pay out on the January, April, July, October timeframe. I really like that. Not a lot of companies pay out in January. This one is definitely going on the watch list for me. And we went back to 2020, 38 cents and some change there. They raised it up in March 2021 to 39 cents. March 2022 up to 39 and a fraction of a penny. And March 2023 up to 40 cents. So you can see they're only raising it up a fraction of a penny each time, which is what that 1%, 1.27% dividend growth, but at least they're growing it. And the repurchase of shares is a positive as well, and such a low payout ratio. Really would like to see them increase it a little bit. But overall, again, this one is definitely going on the watch list. If you are looking for something out of the material sector, this one definitely looks attractive. It is out of the material sector and is a dividend aristocrat here. So very, very nice one here. Hopefully you've enjoyed the video. Let me know what you think down in the comment section below. Is this in your portfolio? Is it one you are watching? Would love to know your opinion on this one. Now, this is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I am interested in potentially investing in it, just like we just did. And since I am interested in this one will go in my watch list pile, and I will do more of a deep dive. I will go into the financials, really look at where they are with their debt levels, with their revenue growth, with their assets over liabilities. How is their margins looking? There's a lot of good information. You want to make sure that you understand what you're looking at, and looking at their books to make sure that they are profitable and have been profitable and will continue to be so. If a company meets 5 of 8, it goes into my watch list pile. If it's a financial company like a bank, it must meet 6 of 9. And then, like I said, I do more of a deep dive. Well, that is it for this one. Let me know what you think of ALB. Again, is it in your portfolio? Are you going to throw it on your watch list? Is it one you are avoiding? Would love to hear your feedback on that. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we may be watching, that we may be buying, or that we may be avoiding. We cannot benefit from each other's investing, but we can certainly benefit from each other's investing knowledge. And that's what I like to do here. Good or bad, if I make mistakes, I'll share that with you. If something that I'm doing is working, I'll share that with you as well. And that is really why I set this channel up. Hopefully it helps you out in your investing journey, and maybe, just maybe, it helps some of you who are on the fence, who have not started your journey, see that it is possible. And if you want to watch a real portfolio be built out week over week, I do portfolio updates every Sunday, so tune back in for those. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this one that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane, signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing with all risk, you can money, should never invest any amount of comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel by a certified financial advisor.